Today is 2025, March, 1st of March, Tuesday. I will start the meeting. Uh, this topic is fundamental of finance. And today I will just briefly show the terms that is very important term. And I will clearly show my learning process. First is 4 types of firms, which is sole proprietorship, partnerships, and limited liability companies, and corporation. This is the definition. What I know, I will read it. For proprietorships, I thought it was private company that most of stake is owned by a person, and the real formal definition that is defined by internet, the Wikipedia and stock invest, Stockpedia and so on, was a partnership is a formal arrangement. Sole partnership is defined in corporation law, which is a type of enterprise owned and run by only one person, and in which there is no legal distinction between the owners and business entity limited. And for partnership, I said partnership is a formal arrangement by two or more parties and manage things. And this was it was the definition in a formal definition, and I failed to think about what partnership is actually. For limited liability company, I also failed to write it. It is a United States specific form of private limited company, which is business structure that can combine the pass-through taxation of a partnership or sole proprietorship with the limited liability of corporation. Uh, uh, until next time, I will think about why I do my definition that I define this. I've stated, and why formal definition. In formal definition, what is the necessity thing and what is the real originality. So we can do quality approach study and quality approach learning on the finance. For corporations, I thought it was groups that has goal of private profit, and corporations formal definition is individual or a group of people, such as an association or company that has been authorized by the state to act as a single entity and recognized as such in a law for a certain process. For double taxation, I failed to write it. As double taxation is the levying of tax by two or more jurisdiction on the same income, asset, or financial transaction. Double liability may be mitigated in a number of ways. For example, a jurisdiction may exempt foreign source income from tax, blah, blah, blah. And for agency problem, I thought it was the friction between company and special agent, but it was a conflict of interest inherent in any relationship where one party is expected to act in the best interest of another. And for the goal of the firm, I thought it was generate profit, but the definition, formal definition, is the main objective of the firm is profit maximization. This is the clear definition. And for hostile takeover, I thought it's just naively taking more than 50%, but it is a type of acquisition where a company takes control of another company without the approval or consent of the target company's board or director. This is the formal definition. For the public company, I said company that who did public offering, and formal definition is a company whose ownership is organized via shares of stocks, which are intended to be freely traded on a stock exchange in over the counter markets. And for IPO, which is company's first public offering to stock market, and formal definition, it is in terms of the first time that a private company sells shares of its stock to the public on a stock exchange. For primary market, I failed to write it, and is where companies issue a new security not previously traded on any exchange. And for liquidity, I thought it was amount of money like M2, and M3, that which added amount of money plus the amount of liability concept, but the former definition refers to that ease with which an asset or security can be converted into ready cash without affecting its market price. So I kind of confused two concepts. Okay, I will finish my recording. Nobody is here, but I will just finish my recording. Thank you.